Great to have you back on our Market Insights. Robinson Sentongo, Senior Associate, Cornerstone Asset Managers. I'm here with
Arnold Atwebembire, an Investment Associate here at Cornerstone Asset Managers.
Yes, Arnold.
Yes.
The week has been very interesting. We had the government of Uganda unveil their budget for the 2026-2027 financial year. And the budget was interesting. We saw a huge increment in the budget figure from 72 trillion from the last year, now at 84 trillion.
Yes.
That is a sharp increase of about 12 trillion. And then also we saw the target for domestic revenue increasing from 35 to 45 trillion.
True.
Yeah, what's your take on the budget? First of all, I think you can give us the allocations of the budget.
We saw, of course, security, as usual. It was number one priority for the government this time. Security, they allocated over 10.21 trillion. And then transport infrastructure, 8.79 trillion. Education, 6.6 trillion. Health, 5.23 trillion. Agro-industrialization, 2.26. Wealth creation, 2.49 trillion. ICT, 1.14. Mineral-based industrial development, 473 billion. Tourism, 567 billion. Of course, comparing this to the national planning, the current NDP4 that we are in, of course, we see that government is putting much more emphasis on those 4 ATMs. Remember, the strategy is to grow the economy 10 times, whereby they want to increase the GDP of Uganda to over 500 billion.
So we saw the increment in projected revenues.
Yes.
Increasing from 35 trillion to 45 trillion this year.
Yeah.
That is about 10 trillion increase.
Yes.
The investor now will be wondering, is URA able to meet this target? Because now, if URA is unable to, or if the investor thinks that the URA is unable to meet this target of collection revenue, well, the investor will then price in their risk price premiums in, let's say, the bond auctions. And provided that URA is able to meet this target, if the investors think so, then we shall see the investors asking for a lower risk premium in the bond auctions.
Yeah.
Yeah. Do you think URA is going to be able to meet this target?
In my opinion, URA will hit the target of 44.5 trillion since there is a lot of increment in excise duty. For example, tax for betting, they increased it to 30% from 20%. Looking at cooking oil, 200 shillings per litre to 400 shillings. Quite a lot. Also looking at sugar, they increased it from 100 shillings to 200 per kg. So I feel like looking at this all increment in the excise duty, URA will hit the target this time.
Yes, so that's something the investors are going to be monitoring to see how the revenue collection is doing vis-a-vis the target that has been put. And then also interestingly, in the same week, we had the bond auction. And this bond auction was also a very, very, very interesting one, which you liked very, very much. We saw an increment in the yields. The yields have been in the regions of 15.8%, 15.7% in the secondary market, and we were all waiting for when an increment will happen in the yields. Okay. Well, in this last auction, where they were auctioning a 3-year bond, the 10-year bond, and the 20-year bond, we saw the 20-year bond this time closing at 16.5%.
Yeah.
And then we saw the 10-year bond closing at 15.625%. So this is something that made the investors very, very, very excited about this auction. But also interestingly, if we look at the results of this auction, the results show that there was a lot of demand from the investors this time around. But the interesting thing about this demand, if I look at the results template, which is displayed there on your screen, the investors tendered about 1.1 trillion in the 10-year bond, compared to the 684 billion that they tendered on the 20-year bond. This is something that interested me so much because given that 20-year has a higher yield, why would people tender a full 1.1 trillion running after this 10-year bond? Well, something here could be about the secondary market yields that were there before the auction.
Yes.
You see that the 20-year bond was trading in the regions of 15.8, let's say. And then if the 10-year is trading at, let's say, 15.1, for the investors, perhaps this may not be a big enough margin between the two. It may not be a big enough spread between the 20-year and the 10-year. So you find that the investor now might have preferred to hold a 10-year bond instead of a 20-year bond. So yes, we saw 1.1 trillion of investor money chasing for that 10-year.
Yeah.
But about 860 billion was accepted by the government on that one, which was a very huge amount compared to the 330 billion they wanted.
Yeah, on a 10-year bond.
On the 10-year bond.
Yes.
Then on the 20-year bond, the government wanted to collect 430 billion, but they ended up accepting more at 527 billion.
27, yeah.
Yes, so this is something that showed that on that day, well, there was demand, but also the investors expected risk premium for the risk they are taking on. Of course, we've been seeing the environment. Inflation has been increasing. The currency has been really volatile because of the war. The fuel prices are up there.
Yeah.
So the investor continues to watch the upcoming auctions. How are they going to be? Of course, we're anticipating an increase in the yields for the factors that, because of the factors I've mentioned.
Yeah.
Also, looking at the budget that we've just dissected, government needs the money.
Government needs the money.
Yeah, the investor now will be looking at those higher yields, especially on the longer tenors. Not saying that the yield is going to escalate, but the yields will be relatively high.
But of course, when you look at what government wanted, over like 990 billion, and they really accepted to take a lot of money compared to what they wanted.
About 1.6 trillion.
Wow, what does that one really mean? Does government really have too much love for our money? What does that mean really?
Yes, you've seen the budget, they need the money, and also the investors have not been asking for very, very, very high risk premiums.
Yes.
So the government was able to maximize and utilize this auction to be able to collect double what they wanted.
Oh, yeah. Well, because even if you look at this financial year, really, government really wants to borrow 11.97 trillion. This financial year that is starting 1st July 2026. So I'm pretty sure, do you project the yields to go high since government really wants to come domestically borrow all these amounts of money within the economy?
Yes, I predict the yields will be high enough,
Okay.
of course, because of the inflation. But given that Uganda's inflation environment has been one of the best in Africa for the past couple of years, if Bank of Uganda keeps this up to maintain the inflation, we shall see yields rising, but not sharply, if that inflation environment is controlled.
Yes.
Well, let's continue looking out and monitoring the markets. Thank you for listening to us. See you next time.